Welcome back to the deep dive. Today, we're diving into one of the really polarizing assets out there, HEX. It burst onto the scene with this kind of radical idea, a blockchain certificate of deposit, a CD on the blockchain. So our mission here is pretty clear. We need to get under the hood, understand the mechanism, the staking model, and we absolutely have to talk about the wild volatility. I mean, it crashed nearly 99.8% from its peak. That's huge, plus all the legal drama and international issues swirling around its founder.
Okay, yeah, let's unpack this. HEX is an ERC20 token built on Ethereum. The whole idea really is built around rewarding people for holding long-term, locking it up. And just for context, right now, October 2025, the price is hovering around, $0.0029, which is, just a tiny fraction of its all-time high, which was up near 55 cents back in 2021. So it shows you the kind of risk we're talking about.
Right. They call it proof of weight, which really shifts the focus, doesn't it? It's all about locking up funds, framing it as this decentralized bank CD. But what does that actually look like for someone using it? How does the commitment work?
Well, it's deliberately restrictive. Users stake their tokens, right? They commit them for a fixed period. It can be as short as 1 day or go all the way up to 5,555 days. That's about 15 years. And during that time, the tokens are locked, totally untouchable. That's the deal you make to get the yield.
Okay, locked up tight. But if the inflation rate is capped at 3.69% annually, that doesn't quite square with the, up to 10% yield figures people throw around. Where's the extra yield coming from? Is it really just based on other users like messing up or getting penalized?
That's exactly it. That's the really critical point here. The potential yield comes from two places. Yes, there's the 3.69% inflation new HEX minted and given only to stakers, but the other big piece is the penalties. Money collected from users who end their stake early or even late if you miss your end date, those penalty tokens. They get collected and immediately redistributed to the active stakers who follow the rules. So yeah, the system basically monetizes mistakes or, impatience within its own community.
Wow, okay. That totally reframes it. But you're not just earning inflation, you're earning a cut of other people's penalties too. And when you stake, you get these T-shares, right?
Correct. Your staked HEX gets turned into these shares, T-shares, trillion shares. And that determines your slice of the daily reward pie. The whole thing is deliberately set up to favor long-term commitment. There are these two big bonuses. Longer pays better, and bigger pays better.
Let's talk about that longer pays better bonus. How significant is it?
Oh, it's significant. It gives a major boost to how your shares are calculated. For every single year you commit your stake, you get 20% more effective HEX used in that calculation. And it maxes out, you get a full 200% bonus, so triple your effective HEX, basically if you stake for 10 years or longer. So 10-year commitment means you get a much bigger share of the rewards without actually needing 3 times the amount of HEX stake.
Right. That makes locking up for a long time seem really appealing. But, usually in finance, people try to game the system, right? Like running lots of short stakes, compounding them quickly. Can you do that with HEX? Does that work?
Well, it actively tries to stop you from doing that. And this is where the design gets quite clever, maybe even controversial. It's called the share rate ratcheting feature. It's designed specifically to make sure that one single long stake always does better than trying to compound multiple short stakes over the same total time. See, the share rate, how much HEX it costs to get one T share, it goes up incrementally every single time any stake anywhere in the system matures.
Oh, I see. So the price of entry, the cost of getting a share, keeps going up over time and never goes down. So every time a short-term staker finishes, takes profit and tries to restake,
they have to buy their new shares at a higher HEX price. It eats into their compounding advantage.
So it structurally rewards just locking up and waiting and kind of penalizes trying to be nimble or flexible.
Exactly. It pushes you towards maximum time commitment if you want the maximum potential return.
Okay, so this unique design, forcing long commitments with bonuses and this ratcheting share rate, it's built for lockup. But locking things up like that, well, it set the stage for some incredible market drama, didn't it? Let's look at how that structure actually held up when faced with real market forces.
Yeah, the initial growth was just staggering. HEX launched late 2019, December. All-time low was tiny, mix 0.0001451. But then sort of mid-2020 through late 2021, the price went almost vertical. Our sources mentioned, an 8,954% surge in 2020 alone, eventually hitting that peak we talked about, near $1.55. Just incredible numbers.
And you really can't separate that kind of growth from the founder, Richard Hart. His marketing was, aggressive is one word for it, highly promotional. He seemed to leverage the protocol's commitment demands to amplify this promise of, grandiose wealth.
Absolutely. That style plus some of the initial distribution mechanics like the adoption amplifier phase, it led to critics pretty much from day one calling it a Ponzi scheme or a scam. He's always been a very controversial figure. I mean, there was scrutiny even before HEX about his past activities, online marketing, even alleged email spamming under his original name.
Right. And the biggest test for this whole ecosystem probably came in May 2023, the PulseChain launch, hugely anticipated. What actually happened when that mainnet finally went live?
It was kind of a disaster, honestly. A classic sell the news event. Showed how much hype was driving the price. Despite years of buildup, the launch triggered this immediate sharp dump in HEX's price. It dropped by about a third, went from around 8 cents down to 5 cents pretty quickly. Expectations just weren't met. People complained about high transaction fees on PulseChain. Key exchanges were slow to list the new tokens. Just widespread disappointment.
And we have to remember the scale here. How much HEX was locked up for the related PulseX project? Something like 2.18 billion HEX.
Yeah, over 2 billion HEX locked in those sacrifice wallets, effectively taken out of circulation.
So the fact that the price still crashed, despite that huge amount of capital being sidelined, says a lot. Suggests the negative sentiment just completely overwhelmed any supply mechanics at that point.
Totally. That level of selling pressure, even with those massive lockups, it really confirmed the market was running on narrative, not fundamentals back then.
Okay, so moving from market mayhem to legal battles. The founder ran into serious trouble with the SEC in the US. What exactly were they alleging?
Right. The SEC filed a lawsuit in July 2023. They alleged that HEX, PulseChain, and PulseX were all unregistered securities offerings. Said he raised over $1 billion that way. And crucially, they also accused him of personally misappropriating at least $12 million of investor money. They listed stuff like luxury sports cars, fancy watches, and even the Enigma, that famous 555-carat black diamond. Said he bought them with investor funds.
Wow. That sounds like a slam dunk case for the SEC. Yet, the case got dismissed. That's a huge twist. But the reason for dismissal is key, right?
Absolutely crucial. Yes, it was dismissed in April 2025, but you have to understand why. The ruling was purely based on a lack of personal jurisdiction. The court basically said the SEC didn't provide enough evidence to show that Hart's online actions specifically targeted U.S. investors in a way that gave that particular U.S. court power over him.
Okay. So the court didn't say HEX wasn't an unregistered security, and it didn't rule on whether the fraud claims about the $12 million were true or false.
Exactly.
They just said the SEC couldn't prove it had the authority to sue him in that U.S. court.
Precisely. It was a technical win, a jurisdictional win for him, not a clearing of the actual allegations. Still, the market reacted. The news caused this big short-term relief rally for HEX. Price jumped, 78.8% in about 2 weeks? Just shows the market breathing a sigh of relief about the U.S. regulatory threat being gone, even if the underlying issues weren't resolved.
But that wasn't the end of his legal worries, was it? The U.S. case was dismissed, but there are still international issues.
That's right. The U.S. win didn't make everything go away. He's still facing legal scrutiny elsewhere.
Right.
There's an Interpol red notice issued by Finland related to fraud and tax evasion charges over there.
Yeah.
So, yeah, the legal risk hasn't vanished. It's just shifted geographically, perhaps.
Okay, let's shift back to the tech side for a moment. Even well-built smart contracts can have vulnerabilities. CoinFabric audited the HEX code back in 2019. What were the main technical flags they raised, even if minor?
Well, the audit was generally positive on the code structure, said it was well written overall. But they did point out a couple things. The first was a potential replay signature issue. It was linked to the claim Pete address function, which was part of the initial distribution mechanism for Bitcoin holders.
And what was the potential problem there for a user?
The risk was that the function only checked, I think, an 8-byte prefix of a hash when validating a signature. So an attacker could potentially find a way to reuse someone else's valid signature. If they did, they could grab the 20% referrer bonus and also freeze the original claimant's funds prematurely. Not good. Though, to be fair, the HEX team did address this later. They increased the prefix length to 12 bytes to make it much harder.
Okay, that makes sense. And the second issue, you said it was maybe more critical, related to gas limits and those long stakes.
Yeah, this one was called excessive gas for computation. It hit right at the core promise of the system. See, the function calculating staking rewards, it had to loop through every single day of the stake length. And initially, the maximum stake was 18,200 days. That's nearly 50 years. The audit calculated that closing a stake that long could cost up to 14.6 million gas without optimization.
Wait a minute, but the Ethereum block gas limit back then was only 8 million gas. So, The system designed to reward the absolute longest commitment, the 50-year stake. It would have literally been possible for those users to ever claim their rewards. The transaction would just fail.
That was the finding. It was a fundamental paradox. The longest, most loyal stakers could get trapped. The transaction to end the stake would exceed the block limit, fail, and they'd start racking up late penalties, potentially losing everything.
That's a massive flaw in the core promise. So what did they do?
Well, after that audit finding, and also following an Ethereum hard fork that changed gas costs a bit, they reduced the maximum stake duration, dropped it from that 50-year potential down to 5,555 days. It's about 15 years. That brought the maximum gas cost down enough to ensure even the longest stakes could actually be closed successfully. A necessary fix.
Okay, makes sense. Let's wrap this up by looking at the predictions. What does the source material speculate about the long-term future, given all this history?
Well, again, stressing this is just speculative analysis from the source, definitely not financial advice. They project a pretty dramatic rebound eventually. The estimate for 2030, average price around 0.0203 cents, which from today's price would be like a 700% ROI potential. Still way below the AT, but significant growth. And looking way out, like 2050, they predict an average price of 2.93 cents, maybe peaking at $3.17. I mean, that implies potential ROI over 100,000%. Astronomical numbers, really. Pure speculation, of course.
Huge numbers, definitely speculative. But how does HEX's actual performance, its track record so far, stack up against, say, market leaders like Bitcoin?
Yeah, when you compare, the picture is less rosy, perhaps. Sure, HEX had that absolutely explosive short-term run. That 8,954% in 2020 was wild. But the subsequent crash, losing almost 99.8% and the struggle to recover, it shows much less resilience compared to the big names. You mentioned Bitcoin. It gained over 1,000% in the last 5 years, according to the source, and it's shown a stronger ability to bounce back from downturns. HEX just seems far more driven by narrative, by sentiment, by the founder's actions. It really cements its place as a highly speculative asset.
So putting it all together, HEX is this really fascinating mix, isn't it? You've got this genuinely clever, maybe even innovative financial design, the blockchain CD, the staking incentives, some quite punitive, but it's constantly shadowed by extreme market risk, the founders' controversies, and these persistent legal issues.
Yeah, the price action really confirms that. It's heavily swayed by these external factors. Even getting that major SEC case dismissed in the U.S. only gave it a temporary boost. The ongoing international legal stuff, the memory of the crash, the initial scam accusations, it all hangs over. It's a very volatile picture.
So it leaves you with a big question, doesn't it? When an asset's fate seems so tied up with one single very polarizing founder and their legal battles, does the cleverness of the underlying tech, the staking mechanism itself, even matter that much for its long-term value? It really makes you think about the kind of risk you're taking on for that potential highly speculative reward.